Reporting there. Now, the markets will open in just a few hours, and the question you probably have on your mind is, now what? What now? The Dow begins below 11,000 for the first time in months, and some experts say this could be just the beginning. Joining us live now from the New York Stock Exchange to break it all down is correspondent Carter Evans. Carter, good morning to you.
Good morning, Greg. Yeah, it could be just the beginning. I think that's what a lot of people are asking, but I'm looking at futures right now, and the futures are pointing to a slightly higher open, but I think a lot of this depends on what happens with AIG today. Of course, AIG downgraded again last night, twice, once by Moody's and another by Standard & Poor's, and that is certainly bad news.
How big of a drop, how significant is a 500-point drop, and can the market recover, say, today, tomorrow, by the end of the week?
You know, it's all up in the air, I think, because we're in uncharted territory here, Greg. I mean, I think a lot of people don't know what is going to happen. 500 points, a lot of people are saying, yeah, that's a big drop. But many investment analysts are saying, hey, you know what? It could have been a lot worse. As far as when we could recover this, well, I think that's going to depend on a lot of the news coming from the financials today. And I think a lot of people it's kind of a wait and see. Let's see what happens with AIG. And a lot of analysts are saying right now that bankruptcy is a real possibility, and even this week.
What should the average person really be concerned about when they hear about major investment firms that have been around for more than a century starting to crumble?
Well, I think here's what the average investor should be worried about. Where is your money, first of all? Have you got it in cash or have you got it in securities? These investment banks, they're not supposed to gamble with your securities, so they'll just be transferred to someone else as that investment bank gets taken over. As far as cash, that's all insured by the FDIC. So for the most part, I think average investors really don't have a lot to worry about, unless, of course, they have stock in some of these companies that is tanking right now.
People were told not to panic back in 2007 when signs of the subprime mess were starting to show. Will it get to the point where it's just really too far out of control?
You know, that's a tough call to make. I mean, a lot of analysts are saying right now, don't panic. It's the same thing. Don't panic. If you've got time to ride it out in the market, ride it out. The American financial system as a whole is strong. It's just going through a rough patch right now. And if you can ride it out, stick it through. But, you know, a lot of people may look at the markets and may look at their losses and say, hey, you know what, I think I'm going to cut my losses right now. And that could pose a problem. If everybody starts to pull out right now, well, investor confidence goes down, and that affects everyone.
Usually after there's a big market drop, a lot of people try to get into the market and see if they can pick up some really great stocks that are low prices. Do you think that that could give the market maybe a bit of a push this morning?
Yes, that could give the market a little bit of a push this morning. And I think that that's why we're seeing futures in a slightly positive direction right now. I mean, people are looking for bargains. And if you've got cash on the sidelines, at some point, maybe now, maybe in the near future, it's going to be a real good time to get in, because you can get these quality companies for a song.
Carter Evans, live from the New York Stock Exchange this morning. Thanks for joining us.